Welcome back to the Spend Life Well show, where we talk about all things finance and faith, helping you to align your wealth with your values. I'm your host, Certified Kingdom Advisor Mark Trice with Clear Vista Financial. And today we're going to talk about the age-old question of, do I buy? Do I rent for my housing in 2026? Has it changed any over the years? So for decades, buying a home has been viewed as one of the most important financial milestones in our lives. But today's housing markets made that quest a little bit difficult. On a previous podcast, we talked about why things are so tough for millennials and Gen Z when it comes to housing and all sorts of different things. But the basic question remains the same. Should I rent or should I buy? And a lot of that depends on more than just home prices or mortgage rates, okay? So we're going to break that down today a little bit. Today's verse for our conversation is Isaiah 32:18. My people will dwell in a peaceful place, in secure habitations, and in undisturbed resting places. So while the decision to buy or rent is important, our greatest peace doesn't come from our Adobe where we live. It comes from knowing God is with us wherever he leads us. So that's really important to remember. And if you don't have a relationship with Jesus Christ, I encourage you to seek that out, talk to someone at a church, or just pick up a copy of the Bible. They're all over the place in most hotels, and to see what that's about. So the number one question is, we shouldn't just ask, can we buy? We have to ask what we're giving up. Now, what do I mean? Well, when we buy, most purchases require a down payment, a quite significant one, sometimes 5 to 10 to 20%. 20% is better, if I'm giving my opinion. The down payment is often the largest check you'll ever write. Excuse me. But that's not the only cost when it comes to buying a home. That money that you put down to purchase a home, it becomes unavailable for other financial goals or needs. So before we buy, we have to ask, when I purchase this house, after I make the down payment, will I still have a healthy emergency fund? If you're dipping into your emergency fund to put the down payment on the house, that's a no-go. We can't be doing that because we don't know when we might need those. Another question is, if I buy this house and pay a mortgage and put a big down payment down, will I have enough? Will I have to reduce the amount that I'm saving for the future? That's an important question. Will I have enough cash if something unexpected happens? That ties more to the emergency fund type thing. But a lot of people we see, they become house rich and cash poor, meaning that things will happen and we won't have the cash to be able to deal with them. So you shouldn't dip into your emergency fund. Buying a home shouldn't reduce your retirement savings. And I still have to make sure that I have enough cash for unexpected expenses that pop up. Because being a homeowner means taking on a lot more responsibility. And owning a home should not make you more financially stretched every month. So let's talk a little bit about renting. That has some more flexibility sometimes. Renting doesn't build home equity. That's a downfall. But it can provide something else that's valuable, that flexibility. Renting often makes life transitions easier and less expensive. So if I get an opportunity for a new job in another city, I have to move. Sometimes the rents are maybe for 1 year, sometimes less. I know in searching for an apartment for my daughter, lots of different flexible terms with renting and things like that. So I can basically pack up and move within a reasonable amount of time, and I'm not held back by owning a home in that particular city. Financial flexibility can make transitions easier. It's not always easy to measure, but it can have a significant impact on your long-term financial health. I think one question when we have to decide between buying or renting is, how long do we plan to stay in that particular community? A lot of people focus on the interest rates. Fewer people think about time. If you're thinking about moving to a new city in 2 years, I wouldn't buy a home. I would look at it from a standpoint of, I need flexible short-term housing so I can rent when I know I'm going to be moving to the next city in a few years. There's also other things that you have to consider when you're buying a home. You've got closing costs. You've got title insurance. You've got moving expenses, realtor commissions and things. And depending on the market, you may be paying more of those or less of those. Right now, in real estate in Central Texas and really all around the state of Texas, it is a buyer's market, meaning that conditions are favorable for those that are looking to buy versus those that are looking to sell. But if you're planning on moving in a few years, buying may not give you your investment enough time to offset those costs. And that's important because we don't want to be underwater in our home purchase and have to turn around and sell it for a loss because of some of those expenses. And because you do have to pay the realtor usually on the way out. And as a seller, you're paying both the seller's commission and the buyer's commission or buyer's agent commissions and so forth. So sometimes the biggest factor is the how long you expect to stay, not necessarily the current market. So can your budget handle surprises? This doesn't happen as much for new construction of homes, but it does happen for a lot for existing homes. So here's some things that you might want to consider, because most lenders qualify buyers based on what they can borrow, and that's different than what you can afford. Now, there are formulas that lenders use to determine your debt to income ratios and so forth. We're not going to get into that right now today, but just because the lender says that you can qualify for a mortgage doesn't mean that you should be buying it or that you can afford it. What happens if the property taxes go up? Well, you have to pay that. What about homeowner's insurance? What, God forbid, the air conditioning goes out and you have to replace an entire HVAC unit that costs you a nice whopping $10,000. Can you handle that? Homeownership comes with risk, and homeownership should not require every dollar that you bring home. If back in the prior to the great financial crisis, we saw people that were having debt to income ratios that were north of 50%, and they were getting loans. Sometimes there were these no income verification loans. So you didn't even have to prove that you had an income. In Florida, they had people in prison that were buying homes without having any type of income whatsoever. And of course, those homes, when the market crashed in 2008 and 2009, those homes were underwater and they were foreclosed upon. So you want to look at the big picture. You will have additional expenses. I'll share this one little anecdote because it happens often with new construction. So when a builder is building new construction, they are putting it on a plot of land, and they don't necessarily know what the property taxes are going to be after they sell you the home. So I've seen circumstances where agents of the builders or whatever realty is representing them will give you a cost sheet and say, here's the mortgage and so forth, and there's just very little amount monthly for taxes. And you're thinking, oh, well, I can afford this. And then the Central Appraisal District sees that you have purchased a new home, new construction on a plot of land, and they revalue the property. And suddenly your taxes go from $50 a month to $900 a month. Can you handle that? And a lot of new homeowners don't realize that's going on. And so be careful to make sure you fully understand the cost of any home purchase all the time. So you also want to look at your overall financial plan. Your home is just one piece of the financial picture. You don't want to consider it an investment. It is a place to live. So that's why the trade-offs between owning a home and renting a home or renting an apartment are so different, but so essential to evaluate. So before you buy, you want to consider, will it affect your ability to save for retirement, build an emergency fund, pay down high interest debt, give generously, and reach other long-term goals. And believe me, buying a home is a wonderful milestone, but it should not come at the expense of your overall long-term financial plan. So, should I rent? Should I buy? And instead of asking which one option is better, ask which one fits my current season of life. Which one supports my long-term goals? Which one allows me to be the best steward of what God has entrusted me with? If you're thinking about buying or thinking about renting or trying to decide that, and this is not just for young consumers, this is for retirees as well. There are some advantages to renting in your latter years versus owning a home. We can get into that. If you'd like a consultation, you can look at that with us and we'll help you determine. That's something called an imputed rent. The cost of what it would cost to basically, if you own your home, what it would cost to actually rent that home. And so if you're considering renting or buying, look beyond the monthly payment. Think about how the decision affects your overall financial picture. Make sure your housing choice supports the life you're trying to build. I think it's great to rent. I also think it's great to own a home. Owning a home is not for everyone. And so if you'd like some help evaluating a home purchase or whether to rent or not, we're happy to help. You can always give us a call at 254-282-0495. Actually, text us at that line. Text us at that number. You can send an email to info@clearvistafinancial.com, or you can watch this video amongst with many others on clearvistafinancial.com. So folks, whether you're renting or buying, there's lots of trade-offs with each. Make sure that you are getting advice on which one is best for you. Until next time, you've been listening to the Spend Life Well Show. Have a great week. We will talk to you soon.
Securities offered through Cambridge Investment Research Incorporated, a broker-dealer, member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated. Discussions in the show should not be construed as recommendations or investment advice. Always consult with your investment professional before making important investment decisions.